Okay, everyone, and welcome back. And let's go on and get started on the bias chart. As I said, today's an exceptionally quiet day. There's no economic news. There was only Germany wholesale. You have to look at it, but it wasn't anything that was certainly not market moving. Germany wholesale prices. And as I said, we don't have anything in the U.S. session. We don't even have anything on the economic docket until we get to Australian NAB business confidence conditions, and that won't be until in the evening in the U.S. session. So we just don't have anything. So generally, in a situation like that, sometimes you get a little bit of a trade-off, or not trade-off, but an offset of some of the existing positions, which really was with the euro going south. So we've moved higher, but as I've said, bonds are starting to weaken, so that's keeping, even though there's been a little bit of short covering, it's keeping a lid on the euro itself. So we'll take a look here at the euro. We've been looking for 609 since the beginning of last week. And so we got down there to 60, I thought 608, it's actually 607. It looks like it got down to 607. Take a look real quick. Nope, I'm seeing 608. Well, anyway, so like I said, here's the issue with the euro. Like I said, I just look at I just look at the levels, I look at the structure of the market and what the tone or what the theme is coming out. Like I told you, is that, we did see a bounce. We did see a bounce in the euro. But like I said, the sentiment's so overwhelmingly bearish right now. I think most of the issues have been factored, and that's when we saw the bonds take off and go crazy all the way up to, I think it's 53.22 before they finally stopped. I think most of the news have been baked in about the political uncertainty with elections coming up in Europe, to the tune that we've seen the bonds come off quite a bit. But the Greece story continues to remain an overhang, and things are just bearish to euro. That's just it. They're just bearish. And then on top of that, like I said, Trump already said he's going to announce some kind of phenomenal tax plan. That's going to continue to buoy the dollar because, I was reading a research report yesterday. I think it was HSBC, but they're saying he wants to have a weaker dollar, but the economic plans or his stimulus is dollar positive because he's going to raise interest rates, and that's going to go on and be an underpin a strengthening dollar. So like I said, right now things are just very tough, to say the least. Thank you very much. HTML says very nice on the call on 106.09 euro dollar. Yeah, I was just, that's what I'm saying is, I did go and say, hey, I'll take a bow on that one. But all I'm doing is I'm looking at the levels and the price structure. Look at that. That's 609. Look at that. It's big as Dallas right there. Look at that. That thing's been sitting there since Moses crossed the desert. Obviously a bit of an exaggeration, but I've had that there. And when you highlight that right there, look to your far right, what does that say? It says 609. What was the low? 608. So all I'm doing is I'm just looking at levels, and I'm looking at the structure of the market and where I think it suggests that the market can go to. I'm not saying, well, when I look at this pattern, that projects to this, and that's where it's going. I mean, like I said, once again, all that matters is, no one really cares at the end of the day whether you made a call or you didn't make a call. It's just, what have you done now, and how are you going and trade it? I did get long the euro this morning, and I'm glad I got out. I mean, like I said, it's just right now things are just things are just negative, and it certainly doesn't help with the bonds going lower. So here, we talked about getting a bounce from 609. We'll get to 609. We'd see a bounce. We did get a bounce, but it looks like the kind of bounce that we're getting at this point, and without any news today, it looks beyond feeble to me if you consider how far the euro's fallen. Like when it got here to 643, look, that was a nice steady bounce. But look, we've gone even lower, and it's still, it's like the old commercial. I've fallen and I can't get back up. So we're taking our time today with the analysis because we just don't have any news. You know what I mean? And on top of that, it's a very slow day. So we're spending a little bit extra time on each of these pairs. This is the last stand at the Alamo right here, 568 to me on a 2-hour close. Doesn't mean we couldn't get below that, but and really if things turn negative, here's that 528 to 61%. We could maybe eventually go on and get there, but this one's very important. I mean, if we were to get there, what I'd want to see it is get there down here and then still close above the bias pivot or on the bias pivot. It's not going to be good if it goes and closes and stays below. Now, like I said, I've seen it before where they, here's a good example, you see where the market got it. Well, it was over an overall test. So I can't say that is such a good example. But I'm saying is where the market closes above the bias pivot and then it starts to lose it again. Because really, like I said, I'm just looking at the bias pivot as far as above it is bullish, below it is bearish, and use that kind of like as a sentiment. So in the sense that when I say above it's bullish, below it's bearish, is that people say, at least the way I look at it is, woohoo, we got above 568. And then all of a sudden it's like, oh no, we're going right back down. We're losing it. We're losing it again. We just got it, and now we're losing it. And then that gets the market worried and thinking, oh no. And then we start heading back down here. So that's the way that I go in and look at that. And it's just a matter of the most touches. That's how I look at the bias pivot. I don't go, as I said before, I don't use the things I used to use on the floor. I think it was you had the high, the low, the close, you divide it by 3 or something like that. I just go with the most touches. I guess for some people, like I said before, I guess that's, it's the same thing for those that use volume analysis. They're going to say, well, there's a lot of volume there and whatever. So for today, I guess we've already come down to the 609. So you have to see is what if they fall? Well, yeah, then I guess we'll have to come even lower. So what would be a good area? Probably right here. It doesn't mean that's where that'll be the end, but I'm saying that's where they probably try and shoot for. Because it's quiet. So it doesn't mean we couldn't make new lows, but I think those new lows would be reasonably tempered. So right now, for today, I have to say, which isn't even much, which is 692. I think we're going to have to move that down to about here, which is 581. 581 right there. To me, and the way I'm looking at the 581 is if you were bearish and you got short, I'd be looking to cover at 581. We still have this 568, but I think from there you'd probably get a bounce back, and that might take you above the 6s, and then they'd fail again. So for today, we're going to mark this as 581. Now I say for today, I mean between today all the way till tomorrow. We've seen that happen before with the euro. You see what I'm saying? So, when I say for today, going forward until we come back tomorrow. So we could see the 581, and we may not see that till Asia. You see what I'm saying? Or early Europe. So that's what I'm saying. It doesn't mean that we're going to go there today in the U.S. session. It's very quiet. But the way this market's looking, it's looking pretty sick as a dog. So let's come over here and update this to 581. And on the upside, about there, I'd say 679. Well, let's see, 682. Then the whole idea about this right now is because it's in a relatively tight range. I don't think we're going anywhere. Let's move this right there, 681. So I think we're staying in a relatively tight range. And at this point now, I can't say that it's bullish anymore. I have to say, we'd have to say it's not even range. I have to say it's bearish now. Now it's back to bearish. And I told you before is that our outlooks are relatively close, tight. So we don't go too far out, just over the next few days. Bonds made those lows. They're kind of hanging around here at 51.14. But I think it's just that it's quiet and we're just kind of sloshing about. So I don't think you can place a whole lot of weight on any of these moves right now. Today may just be very quiet. So let's take a look at the cable. Now, cable, we had 24.33 to 25.24. And we just came up here. We kind of gotten above it and we're still hanging around there. As a matter of fact, there's our little level there. It hasn't, we already came up here to the 61% and failed, so we're going to get rid of that. It's tricky because the cable is acting a lot better, even though we come to that 25.24. I think this cable could really move up. So I would not be trying to short this thing at this point. And the next key level, I think, would be right there. Even though we've got that 26.51, to me, I think it would be here. And I would not be trying to short this market. It looks like it's holding up really well. That's 26.37. And let's see where support would be here. To me, technically, it just seems to be holding up really well. Maybe at this point, some people are just not really somewhat gun shy by trying to step in and short this market. So that may allow this market to even go up a little bit higher. If the wheels fall off, then we have that 24.33. I would move this just a hair lower to here. And we'll take a look at that. I don't think we're going to go down there in the next 24 hours, but just in case, 24.16. I like that 24.16 there. So we're moving to the Aussie dollar, which is really hung well. And this market has really held up well. Our resistance was 76.86 with 75.60 as support. There's our 76.86, and there's a 75.60. Look, we've talked about where it could eventually move higher. I think we mentioned that. But for now, it's really having a tough time here. One of the things that the Aussie can do, and you have to be a little bit careful, it's already had a pretty good run. Obviously, the Chinese CPI is going to have some impact, and also the NAB business confidence, and then I think it said that employment data is due out, I believe it's Thursday. So I would be gun shy about getting involved in a move at this point. Okay, it is holding up really well. I think that if the China's numbers, which were expected, as I thought they were going to start to come in a little bit weaker, and there'd be a lot more concerns about China. And it looks like they're not. They were ordering commodities at a record particular pace. We went over that story last week, and that's why the stories help you, because they help set the tone. And now you can see why the Aussie continues to remain high, despite I think it's really overdone here. I'm more apt to think, unless they get some boffo number in employment, I'm more apt to think that we'll take out these highs and then we'll end up coming back in. That's what I'm more apt to think. So the 76.86 is key, but if they gun those stops, which I kind of believe that they will, unless the Chinese data comes in bad. I've been looking at 77.10. So let's go in. I mean, it's obvious that the stops are just it's obvious that the stops are right here, okay, or just above it. My thoughts is that if we get above it, I don't think it's going to immediately fall apart, but if people were saying, hey, I'd like to take pot shots at it, I think right here at, you want to look at this area here. Between 77.10 and 77.31. I think you could have a little bit of a tough time there. We can just draw a little thing right here. Matter of fact, let's see if there's anything else. Yeah, heck yeah, let's see how this volume in here. So I think that the Aussie dollar, even if it gets up there, is going to have a hard time between 77.10 and 77.31. I think that probably will goose the stops. But I think it's going to have a tough time there. I mean, those stops are so ripe. I've seen instances where the Aussie will, I don't think it's set where it's going to goose the stops and turn around and fall apart. I think what happened is it gooses the stops, and then we sit there and we kind of, I wouldn't say flail away, but we kind of like trade in a tighter range, a back and fill a little bit, and then I think that we just don't have, we'll have to see what happens, because obviously you'd have to be bullish, but my concern is we could see, we'll have to see how the employment numbers come out also, but concern was that we stick around this area for a while and then we come back in. I think we saw that, was it during the summer, I believe? Hang on, I'll show you where. Let's take a look. It was here, April of last year. Yeah, you see how we were here and we're bumping against the lines, bumping. You see here, here. And then we get above it and we just kind of, and I remember when it got up to here, people were saying, God, if it gets past there, we may go to 82. I remember a lot of people saying that. And you see how we hung around here and then we kind of lose the momentum. They give it one more try and they can't even get up to here. And then we just start falling apart and then all of a sudden the wheels fall off the caboose. And then look at that. That thing was bullish. Look how bullish that thing was. It's almost reminiscent of what we saw now. Look at that. Tell me that didn't look bullish. Look at that. Okay, now we've broken out. You see that? We've broken out. I knew it. We're going to much higher highs. And you see how it stalls? We pull back. Oh, they're just back and filling. Okay? Now we're just, wait a minute. Oh, okay, I'll buy it there. And then look. They hang around, and look. All of a sudden, it's south of the border. That's what I kind of believe is going to happen here. is we'll blow the stops here, we'll come in, we'll just run, have some trouble. I'm not saying we couldn't get above 31, but I just think that it'll just kind of, you see a lot of trading here and then eventually start to slide back in. So we're actually going to put the resistance here at 77.10 because I'm thinking they would goose them. And I just feel that maybe a little bit of pushback. It doesn't mean that we couldn't hang around here and push up in here, but for right now, we're going to leave it at 77.10. And I think we have to move this a little bit higher, but I want to leave that there to right here right now for immediate support, which would probably be like 75.97, I guess. 75.95. Because we have to respect the range that it's gotten tighter. So let's take a look at the Kiwi. And we're still floundering around this 38%. It hadn't been able to pick itself up. We talked about this. We broke past. And once again, I don't generally do trend lines, but if they're pronounced, and I thought that was, I'll put them there. Not going to just ignore it just for the sake of ignoring it. And we came down here to the bias pivot, and you can see the trouble we had. We just couldn't get back above the bias pivot. So that's opened the door for lower. But look, it's holding up really well. I kind of think that what may happen is if we see the Aussie dollar move up to those higher highs, it may pull us back up above the bias pivot as a sympathy factor. But I think that if the Aussie runs out of gas, that would open the door for us to move much lower here in the Kiwi. And if it does move much lower, which I think would be the case, I think we would make a move for down here. For right now, we're looking at that, but I want to move this here because I think that this would be, if the Aussie runs up there and then runs out of gas, I think we would make a move. It's not really that far. Well, for now, we would still stick with it, which would be down here to 70, 75. And that's on the idea that the Aussie breaks higher, we get a sympathy rally, we're above the bias pivot, and then ultimately we can't hold it. And then if it breaks below that bias pivot, you just get short and stay short. And I think that we come down here, probably would actually come closer to 750, 70.50. But for right now, I think we have to keep the resistance as it is right now. It's 71.23, 72.65. I've got 72.65. It's actually, the bias pivot is 25, so it'd have to be, let's make that 72.42. It's got to tighten it up a little bit. We're going to go and take the break now, and we'll be back. And thanks for joining us here. And when we get back, we'll cover the CAD.